Welcome back to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm pleased to have with me once again David Jensen. Welcome, David.
Good morning, Jay.
Good to have you with me again. David, I believe you've just listened to Marion Katusa's interview that I did with him. He discussed the petrodollar, a lot of the things that you and I discuss from time to time. Have you any comments on Marion's views on the petrodollar?
Well, I think that the rest of the world is being forced to an alternate currency because of the activities of Western central banks. So I don't think they have much choice. They either face destroying their currencies and their economies by following the monetary policies, or they need to find another medium of exchange which allows a balanced continuation of their economies as the West is pushed sideways here by central banking policy.
Well, certainly are a lot of changes going on right now and between Russia and China and the petrodollar, and we're going to have to see how that all shakes out. But it is very interesting, and certainly I think with Russia looking to protect its own interest and its own energy interest, primarily, as you and I have discussed, Russia has a huge amount of natural resources that the rest of the world has wanted to get its hands on. At least the West has tried for many generations. So
centuries.
Centuries. It's really a fascinating topic, and it certainly makes for some interesting times ahead of us.
I don't see Russia as this grave enemy of the West. We're told a lot that there's going to be another Cold War with Russia, etc., etc. But really looking big picture, this latest crisis in the Ukraine has been driven by George Soros, who works for the Rothschild banking interests, and by Victoria Nuland of the U.S. State Department. And her husband is Robert Kagan, who's a very famous, infamous, really, neocon. Mm-hmm. So, I mean, what we're looking at right now is not, it hasn't been Russia attacking the West and doing all these things. We've created a crisis by overthrowing the government in the Ukraine, and now we're to believe that there's this new Cold War coming because Russia's a bad country. But really, the West, especially the Anglo-American financial interests, have been really salivating at the chops to get their hands on the landmass and the assets of Russia for centuries. And I really look at this whole Russian issue as a distraction. We are having our own economies collapsed by Western central banking policy, and Russia to me is really a sideshow, Jay, in summary.
Yeah, well, I think that makes a lot of sense. It's certainly consistent. Your views are consistent with those of Daniel McAdams and Ron Paul, the Ron Paul Institute for Peace and Prosperity. The idea is if you go out and kick somebody in the shins and they strike back, that somehow they are the guilty ones. I mean, that seems to be what's happening here from my perspective. Let's take a look at the metals markets. You have talked about the premia and the various gold, silver, platinum, palladium, the precious metals markets. They've been a large premia there. Talk to us about that. Not a lot of changes recently, but you did notice there's a huge backwardation now in silver and gold too, right?
Yeah, that's true. Gold is 0.7% in London versus Shanghai. There's a premium in Shanghai for it, and 12% for silver of Shanghai versus London. Palladium is 16.6%, and platinum is 6.1% versus London. So, I mean, these are fairly steady. They're not changing a whole lot. But as you note, that there does appear to be a very large backwardation, an increasing backwardation of silver and gold, with the physical spot market price being 0.5% higher for gold than the near future price, and about 2% higher for silver than the near future price. And these are the highest backwardation levels that we've seen in 2014. So that should not theoretically be possible for gold. At least there's 170,000 tons of gold above ground. Mm-hmm. And if your spot price is higher than your futures price, you simply sell into the spot and immediately buy a futures contract.
Sure.
And you've locked in your profit. You've sold at a high price. You've bought at a lower future price. You've waited a month and you get your metal. Mm-hmm. And the only reason that wouldn't extinguish itself right away is if there's not trust in either getting your gold back or if there's a lack of trust in the currency, and those usually go together. So that is very interesting to see that happens. So we're not getting signals from Shanghai in terms of price premium moves, but we are seeing it in the West's gold markets, that we're seeing that there is shortage of metal appearing at the highest levels in quite some time.
Mm-hmm. So, in other words, you might expect to see it in copper or some commodity that gets consumed if there's some, say, a mine stoppage or something, and all of a sudden there's a shortage, and then there'd be a rush for it. But it shouldn't happen in gold because there's so much of it above ground, and
that's right.
So the only really reason, as you point out, would be that there's a loss of confidence in the currency or a loss of confidence in the deliverability of that gold a month down the road, or whatever the time frame is that the contract has been issued.
That's right.
Yeah. Well, you notice that in some notes that you sent to me, you note that there's something going on with Russia. They were going to be buying some, I guess, palladium. Is that right? And have they delayed that a bit?
They have. This went back to our discussion in the summer that the Russian State Metals Agency, Gokran, had announced that they were stepping in to buy palladium. And palladium, as Standard Bank has indicated, is a 2 million ounce shortage in a market that has a total production of 6.5 million ounces from mine supply. So it's a substantial shortage that was anticipated. And Russia could really have sent this thing into a moonshot in terms of the price, but they have held back and announced that they're waiting until next year to start buying. And this kind of feeds into our previous conversation, Jay, about Russia, is that Russia appears to be treading very, very carefully with their visible, overt actions so that they are not accused of causing a calamity or of disrupting the markets, because that would serve as a pretext or an excuse for military intervention, I think. So Russia can see as well as anybody else that we are taking ourselves down through our central banks. And that is the reason I think that they've been so careful. They probably also need the currency, given the issues with the West that have gone on and the sanctions that have been put in place. So that may be another factor. But I think as a whole, we can hear over and over Putin saying how careful he is going to be and he wants to play by fair rules. Whether he is or not is another question. But I think that this feeds into the fact that they aren't stimulating a crisis in the metals market when they really could have very easily.
Mm-hmm. They're not interested in a hot war. They're looking for a peaceful solution, perhaps. But that's certainly not the mainstream media's viewpoint that we get all the time here. It's the other way around. Russia's the troublemaker, and we're the peacemakers. That's why we send our bombers overseas all the time.
Yes, Russia's always been expansionary. They've always wanted to be giant.
Yeah, they've always wanted to take over the world. We would never want to do that, of course.
No,
our rulers, our ruling elite would never want to do that, in spite of the fact of that little quote that we read from David Rockefeller the other day that seemed to suggest that perhaps they should, the really wise and smart people should, of course, have control of the world's governments. Okay, so I'm sick and tired of it, though, David. I'm sick and tired of gold manipulation. It's just, it's been, the gold antitrust action guys first started talking about it. I suspected before that it was going on, and in fact, we know it was because there's the London Gold Pool. There's all manner of ways of trying to suppress the gold price over many, many years. But you're talking a little bit about, you're asking the question, why can't we just be adults and deal with it out of reality? Why can't we? Why can't we face up to the fact that gold is manipulated? Somehow we've come to accept the fact that intervention, not you and I as Austrian thinkers, but the mainstream has got most people convinced that when the Fed goes in and drives interest rates down, that's a good thing. When it manipulates the currency markets, that's probably a good thing. But somehow when it comes to gold, we're not allowed to think that gold manipulation is even going on. Yeah. Why the disconnect here?
Well, I think that, and myself included, that the whole questioning of gold manipulation is quite repugnant. It bothered me coming from the world viewpoint that I came from. And, I think that ever since John F. Kennedy's assassination, the term conspiracy theorist has been introduced into our common language. And as a consequence, things get categorized, and things that make ourselves uncomfortable get thrown into that bucket, and then we don't have to deal with them anymore. And I think to some extent it also relates to a human condition called normalcy bias, and you can look that up in Wikipedia. But normalcy bias is a condition where humans ignore danger when facing a potential crisis. And I think that people do that just so that everybody doesn't run in every which direction at the first sign of crisis. But the characteristics of normalcy bias is to interpret signals and additional information in the most favorable terms possible to negate the possibility of a crisis. So, gold manipulation is at the heart of interest rate manipulation and the bubble economy that we live in. It's how it was created. It was how it's possible to create it, because you couldn't have printed money at the breakneck speed that Greenspan and the Fed did in the 90s, with gold shooting through several $1,000s an ounce. So there's been a very structured reduction of the gold market away from responding to physical demand. We know that in the late 80s at the Rothschild banking fraternity pushed for the introduction of unallocated gold, lobbied the Thatcher government for that. And and here's that whole word conspiracy theory again. Whenever you hear the word Rothschild, and I certainly myself used to respond to that thinking, "Oh no, here we go again," and I would just click the off button on the computer. I wasn't interested. But yet, we look back to the creation of the Federal Reserve. We know it's a paper Ponzi scheme built on debt, and that it doesn't work. It benefits the financial sector. And the two key houses at the center of the creation of the Fed were the Rockefeller family and the Rothschild family through their J.P. Morgan interests. J.P. Morgan was found after his death to have little personal wealth and have been merely a front for the Rothschild banking house. So, when you keep running into these two R words over and over again, it's like, oh, here we go. And then all of a sudden you go, well, what's going on here? Maybe we better dig a little bit deeper. And, when you start to put the pieces together, it becomes unavoidable. I mean, even in the 1970s, the whole issue of conspiracy and the loss of U.S. gold reserves, it came out through a magazine at that point called the National Tatler.
Yeah.
And it raised the point in 1974 that the U.S. reserves had been, Goldfinger-like, had been stolen by a group of bankers. And it turns out the informant for that story was Louise Boyer, who had been a 30-year-plus secretary of Nelson Rockefeller. And 3 days after the story came out, she fell out of her apartment building window from the 10th floor and died on the sidewalk. So, I mean, it just is thing after thing after thing. You're thinking, none of these things in and of themselves can possibly say that there is gold market manipulation or that the market is not a real market. But when you start to put together, the creation of levered instruments in London, that they're now trading 200 million ounces a day, it's levered 100 to 1. Continual rumors of issues with the U.S. gold reserve, and in their response, by the way, to that 1974 article in the Tatler, there was really what people think are really a series of sham photographs. There was never an audit. The last audit happened in, I think, 1953.
Yeah, under the Eisenhower administration.
Yeah,
right.
the last real audit where you actually counted bars and tested the assay quality of them. And so, time and time again we encounter information and it's either ridiculed in the press or it's ignored. And I think that the time has come where we're unable to ignore these things anymore, and we really need to deal with the issues because the crisis in the financial markets is becoming so large that we now need a currency alternative, and we need one that is stable. And as much as I have my concerns about Alan Greenspan and what he has done to the Western world, he did come out last week and say that we needed, that people needed to buy gold. And I think when he starts to tell people to buy gold, it must mean that that the days are short, and he's comfortable saying it, and that it won't make much difference.
Well, when you look at the almost exponential growth and the obvious addiction to money creation by the Western world, the actions last week of the Bank of Japan, I think, was very, very telling. Just as the Fed actually decides it's going to discontinue quantitative easing, David Stockman points out that what the BOJ is doing is the equivalent of $3 trillion of U.S. money creation And I mean, that's 3 times as much almost as what QE was doing at its peak, U.S. quantitative easing.
Yeah, and
So
that's per annum as well. I think that was 750 billion per annum that they were talking about. So
right.
they're extraordinary numbers.
Yeah, and so it's like more and more faster and faster. It's almost accelerating, and it's like you just have to keep creating more. It's more like it really is like an addiction, isn't it? I mean,
It is.
and it's feeding on itself, and it's becoming ever more unstable, the global financial system, because every time money is created with debt. There's more and more debt that somebody has to pay.
Yeah,
that's out there.
Yeah, we've got $200 trillion of global debt, and the addiction analysis there on your part is very apt. It's not, an addiction is not good for you, and everybody accepts the fact that QE doesn't work. It's not a healthy pattern. It doesn't benefit the economy as a whole. It benefits only the banks, and then Japan doubles down on it. And it's just like, okay, well, this is going to lead very, very quickly to a currency crisis. And it may also lead to a crisis in China, because the Japanese economy is a very powerful, productive economy. And if they crash their currency, they will suck the oxygen out of the room, if you want to use a phrase, in comparison to what the impact on China's economy will be. Because Japan makes very high-quality products, and if their currency takes a dive, they will be able to front-run China on the export markets, and China's moving in the other direction of a stable currency. So we're coming to a fork in the road here, where it's going to be a choice between stable currency countries and those countries which basically want to head down the road to hyperinflation, which is basically the G20s, G20 countries minus China and Russia and Brazil. Because of the enormous outstanding debt that we have in our economies.
Yeah, and you mentioned debt. One of the issues that I didn't get a chance to talk to Marin Katusa about on mic, but I did talk to him before we started our interview. Russia does not have the debt problems that we have, or that China has, for that matter. No. Russia has managed to keep its central bank balance sheet in very good shape compared to what. So I think what you're saying is absolutely true, that the BRIC countries, by and large, are just going down one path, and we're going down the other one at an accelerated rate of speed. So it does seem to me that we are coming to a point in time where things are becoming very, very unstable, and I think your point is well taken, that we would do well to consider this whole issue, and when no less than Alan Greenspan is suggesting you should buy gold, or the gold prices are going to be much higher in the future. I think that certainly makes a lot of sense to start looking at things, take the rose-colored glasses off and look at things with clear-colored glasses, I think.
Yeah, he was the focal point of market manipulation, interest rate manipulation, and bubble blowing in the West. Most Western countries followed U.S. Federal Reserve policy for trade reasons, as well as that they were the central bank that everybody looked to as knowing what they were doing, and it looks like it was all a sham. So when Alan Greenspan is saying buy gold, it must mean something.
Absolutely. Well, I think think back to last week, right after the BOJ announced its huge monetary stimulus. It was Peter Boockvar, who works with Lawrence Lindsay, former Federal Reserve official, and he made the note. He said if he were a Japanese citizen, he'd be buying as much gold as fast as he could right now, given the announcements that were put out by the BOJ.
Yeah, Japan has a very aging population, and that's the last population that wants to see currency collapse.
Oh, amen to that. If you're elderly and don't have a way of making ends meet, and you're dependent on your savings and so forth, that's absolutely right. Anything else, David, before we conclude our discussion today?
No, Jay, I just think the overall thought is that the world turns in interesting ways. It's not always the way that people believe it is, that the information they get on the evening news. And to maintain as open a mind as possible, and to digest information from a wide variety of sources, and try to sort it out yourself. Go around the mainstream sources, consider them, but also look at alternative information. And I think that when you look at the broad spectrum as a whole of information that we get, that the gold market is not the gold market that we used to think it was, and that the matters of the financial industry and the financial markets are coming to a head now, and that people really need to consider how they're going to protect themselves in the years ahead.
No, for sure. And I think that given the instability of the paper markets, obviously you start by owning physical metal, gold and silver, probably the best advice, in addition to staying out of debt and paying off your debts to the extent you're able to do that. I think those are the most important things one can do at this point in time.
One thing that comes to mind was that Francisco's money speech of Ayn Rand, the quote, Jay, is that this is from Francisco's money speech in When Atlas Shrugged. And the comment I'd like to maybe close with is, whenever destroyers appear among men, they start by destroying money. For money is men's protection and the base of a moral existence. Destroyers seize gold and leave to its owners a counterfeit pile of paper. And I think that really is distilled a summary of the situation that we're in right now. We have basically converted a real economy and a real market into a speculative paper or digital bubble. And we now have to deal with those consequences in the years ahead.
Oh, I think that's absolutely right. And of course, if you can get out ahead of the curve, it's really a life or death matter, perhaps, because we do know this, that when currencies go into when the confidence is lost in currencies, they can lose their value very, very rapidly. And Lord knows there's been trillions of dollars that have been created out of nothing over the last number of years, that there isn't a lot of time to react. So I think what people really need to do is be aware of what has been set up, this destruction of currency that's been really very much in process for quite some time. But when there's confidence lost in the money, it's just almost like a New York minute things are going to change. You're not going to have much time to get out ahead of it, I think. So I think a word to the wise is, pay attention now to what's going on, because you may not have too much time to react once the game gets going full blast.
Yeah, breaking out of the denial bubble takes months to do, and there won't be that amount of time when things start to turn, and I think it's going to be very difficult for people who aren't aware of the monetary dynamics around us. Absolutely.
I fully agree with you, David. Thank you very much for being with us again today, and I hope to do it again sometime next week, perhaps. Thank you very much.
Thank you, Jay.
Well, folks, that pretty much does it for this week. I hope you enjoyed my discussion with Ron Paul during the first hour, and then with Marin Katusa, and with the just concluded discussion with David Jensen. Regarding the gold markets, it seems as though the bearish technical analysts who I speak to have been right about gold, while the fundamental guys that were more on the bullish side, they didn't get it right. Certainly we were having another leg down in gold, which is discouraging for sure. But on the technical side, Robert McHugh has been saying for quite some time that he thought we could see another leg down to the 1100 area, and Charles Nanner has also been of that opinion. Michael Oliver has been most agnostic among the technical crowd, but he has refused to see gold as turning bullish any time in recent times. He just said his structural analysis methodology just has not provided either a go long or go short on gold. However, all three technical analysts have been confident that we are nearing a major bull market, major turn upward in gold. Yesterday, my partner Chen Lin noted that his sources from China were saying that China was again taking in huge amounts of physical gold. And just heard, as we just discussed with David Jensen, he noted that there was a significant backwardation for gold and for silver. Well, it's more unusual for gold than for silver for a couple of reasons. First of all, there is so much above ground gold supply that immediately, if there is a backwardation, meaning that the near-term price or the spot price is higher for delivery than for the futures price, that there is an immediate arbitrage that sets in the market as those who are sitting with gold in their vaults deliver the gold and make a profit, which 0.7% basically is what David was talking about now in backwardation. And why not? Your gold is sitting in the in your coffers, and it's gaining you nothing. So immediately arbitrage should set in for gold, not so much for copper and other metals where there isn't an abundance of supply, but for gold where there's 55 years of above ground supply. Why not deliver your gold and get paid for it? Well, the answer to that may be twofold. There's a loss of confidence in the currency, and secondly, there's a fear of non-delivery. And of the two, I would think the second, the fear of non-delivery, is probably the more realistic reason why there is a backwardation now in gold. So, in any event, that is a very curious thing. That's a very unusual thing to see the backwardization in gold as it is. As I have said many times, if I could see the global economy being healthy again, I could easily give up on owning gold. But in fact, exactly the opposite is the case, at least within the Western economies. And the BRIC countries are very much aware of the sickness of the Western world. So as David pointed out just a little while ago, they're not really interested in waging war with the West. In fact, David makes the point, and I think it's very accurate, that Putin is doing his best to avoid confrontation with the West. On the other hand, the West seems to be hell-bent on picking a war with Putin. The BRICS understand that the West is in a self-destructing mode. And again, with China being a net exporter and Russia not having the debt problems that the West has, Russia has kept a very clean balance sheet, central bank balance sheet. Well, it makes some sense that the BRIC countries who have been frozen out of the West to a great extent with sanctions and other means are looking to find a way to survive on their own without the West, and so they are setting up their own banking system, and one wonders if they are not for sure looking with the huge amounts of gold that's being imported, not just recently but over the last number of years into China, if the BRIC countries are not really looking to set up their own currency system, and how better to do that than to have the money that markets always choose when given the opportunity, that is gold, as a foundation for a new currency that is being talked about, and I think probably more than talked about. It's interesting to note just yesterday that in fact I learned that Singapore and China are now having currency convertibility, so they will be, as I understand it, one and the same currency. So it should be really very interesting. I think that's important because it looks like Singapore could be siding with China rather than with the West, at least in a geopolitical sphere, and that could be very, very important, I think. Well, the purpose of this show is to try to search for the truth, and I think that I like to think that our guests today, Ron Paul, Marin Katusa, and David Jensen, who you just heard, are really helping us do that. We want to keep an open mind, and as David suggested, listen to the mainstream media, but consider and think about what they're telling you, and also look at the non-mainstream media as well, and try to make up your own mind as to what is really going on. Certainly, I believe that we are at a point in time when there's going to be an insane amount of money made in junior mining companies, but you do have to pick the right ones. And this weekend I will be going through my list of companies and trying to separate out those I think might be best to sell now for tax loss reasons, and to look at those that can really stay the course through this very difficult time for the gold mining companies. Those that can stay alive without issuing huge amounts of shares should be in the catbird seat. Well, that's all for this week. Until next week, goodbye and God's blessings to you.